Hello, everyone. A very good evening to all of you. I'm very happy to see you again. Can you hear me, guys? Am I audible to
Yes, we
you?
can, sir.
Great, great. So I want response from everyone. Please reply. You can raise your hand if you can hear me. And now, Parshava already responds me. Great. Okay. So, as due to some technical issue, yesterday we were not able to conduct class about the first day live session. So today we will conduct this session. So definitely there is no technical issue, there is no technicality. We just going to seamless and very easy about the today's session. So my name is Dipanshu and I'm your mentor for this financial program. We will learn about lots of things related to finance, stock market and their terminologies in this program. This program gonna be 14 days where we will meet in 3 live session and remaining session would be recorded, which is easily available at your platform, and whenever you want it you can easily access it. So without getting delay, I'm starting my presentation so that we can discuss more about on topics, more about on subjective knowledge. So just confirm me if you can see my screen. Is it visible to you guys?
Yeah, it is now.
Great. So today's is a very important session for all of us because we will discuss about the financial literacy. Financial literacy is very important terminology. Without it, finance is like half of the journey. Without it, we cannot dream about the financial freedom. So financial literacy is very basic knowledge about that finance. So how the financial literacy will help you to achieve your financial dream, how you can achieve your financial goals, and what are their meanings, that we'll be discussing about in this session. So let's understand about this meaning of financial literacy. So the financial literacy is the ability to understand and effectively use various financial skills, including personal financial management, budgeting, and investing. When you are financially literate, you have the foundation of relationship with money, and it is a lifelong journey of learning. The earlier you start, the better off you will be, because the education is the key to success when it comes to money. In simple way, financial literacy is the synonym of financial education. It is a bad luck for India that lots of schools and colleges not provided the education about the literacy of finance. They just provide the academic knowledge and subjective knowledge. That is very wrong. That's the reason the poor become more poorer and richer become more richer. If you know about that meaning of financial literacy, definitely you will be not trapped any kind of financial scam or any kind of Ponzi schemes. When you see around yourself, there are lots of people who are succeeding in their life, irrespective of they are doctor, engineer, vakil, or something else. But definitely they are connected directly with the financial literacy because they have a knowledge and sense about the meaning of money, the value of money. That is very important to understand about this program. So if we get the literacy, so what is the India's state? So you can see this is the snapshot of a very good newspaper. India's financial literacy was then Sri Lanka, Myanmar, Pakistan, and BRICS nation. The reason is that we are not focusing on literacy. We are just focusing on education of academic and subjective. That is the reason we are not aware about the money. So what are the benefits if you get the financial literacy meaning? So these are the benefits. Number one, ability to manage personal finances. Yes, through the financial literacy you can easily manage your personal finances, just like your household expenses, your income, your personal expenses, your EMIs, your rental, your bills. You can easily manage it because you will aware about it, how much expenses I need to do on monthly basis and what is my income so that I can manage it. The second, that is very important, help to differentiate between assets and liabilities. If you know about that assets and liabilities, you're already winning this game, because assets and liabilities is the key fundamental reason of financial literacy. So let's suppose you have a car. So could you tell me in which category car will be fall? In assets category or liability category? Tell me.
Assets.
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 Asset category.
Okay. Okay. Why you are saying assets?
Because it's something you
Means like
own.
for traveling and other things and all. Assets are basically the goods or the machinery that we use for things to achieve.
Okay. See, it could be assets or liability depend on uses of the car. If you use your car for the personal reason, so the car is not generating the money every month, you need to pay the maintenance amount, you need to pay the any kind of accidental damages. So that is a liability. If you use your car for the personal reason, just making a show off, just making for the comfortability in luxury life, but if you putting your car in a rental income purpose, in a any kind of business income, so that the car count as assets, because car is generating income for you. It means any product or any item which generate income for you count as assets, or any commodity or product which brings money from your pocket, that is count as a liabilities. So I have again a question for you. If I have an iPhone, so could you tell me in which category iPhone will fall, assets or liability?
Liability.
Liability.
Liability. Okay. Yes. So it could be assets or liability, depend on uses. If I'm using this iPhone for my personal reason, for just show off, definitely it would be liabilities, because it's a depreciating product. Every day that's value get depreciate. But I'm using this iPhone for photo shooting purpose, for video editing purpose, or any kind of income sources reason. So it will be counted as assets. So you should aware about that which product is count as assets or liability, so that you can easily invest in that kind of product. The third, less vulnerable to financial fraud. Yes. If you have a financial literacy, if you have a knowledge about the finance, definitely you would not trap any kind of financial frauds. There's a lots of scams running in the market. UPI scams, credit card scams, stock market scams, Ponzi scheme scams. There are several scams running in the market. So if you're literate about it, so definitely you will find within a second this scheme is not good. Definitely there is a Ponzi scheme or it is a fraud. Be aware of it. And the last but not the least, create a budget, plan for retirement, and manage debt. Through the financial literacy, you can easily make a budget for your life. You can easily make your retirement planning. That, for example, for me, I want 50 crore rupees for my retirement. So if I want to get 50 crore rupees at the age of 60, so I need to invest from today itself, so that I will get a 60 crore rupees. So what are the sources? What are the amounts, so that I can invest on today and later on I will get the 60 or 50 crore rupees at my retirement? That is given by the financial literacy. So all are the benefit. There are numerous benefits of financial literacy. Mainly I mentioned on these slides. That is very important. Now, how to determine a financial goal? Uh, so financial goal, let's suppose I want to purchase a car. Is it a financial goal? Can you tell me? I want to purchase a car. Is it a financial goal?
Yes.
Okay. I want to purchase a house. Is it a financial goal?
Yes.
Yes.
Okay. I want to go for foreign trip. Is it a financial goal?
Yes. To an extent.
Okay. All these are not a financial goal. Definitely you will be surprised. But yes, all these are not a financial goal until or unless I am not adding the two important components. The two important components is missing out from my statement. That is, if I'm saying that I want to purchase a car, that is a half of the statement. something is very missing from my words. That is time period and the value of car. If I'm saying instead of it, I want to purchase a car worth of 50 lakh rupees within 2 years. Now that is a financial goal. Because goals should be certain, goals should be defined. That I want to purchase a car of 50 lakh rupees within a 2 year. So within a 2 year, I want to purchase a car within a 2 year so that I can make my mind. That is a financial goal. Instead of it, if I'm saying that I want to purchase a car, maybe I can purchase after 10 years, 15 years, 20 years. So that is not a financial goal. Similarly, if I want to purchase a house, that is not a financial goal, but I'm saying that I want to purchase a house worth of 1 crore rupees within a 10 years. That is my financial goal. So financial goal involve two major component, time and value. If both are missing or one of them missing, it will be not a financial goal. So if you want to achieve your financial goal, you can easily make it by the financial literacy. So what are the 5 principles of financial literacy? Through that, I can summarize it, that how to earn, how to spend, how to save, how to borrow, and how to protect. These 5 things are essential. If you know about it, you already know about that financial literacy. How to earn, पैसा कैसे कमाएं, how to spend, कैसे खर्च करें, how to save, कैसे बचाएं, how to borrow, कैसे उधार लें, and how to protect, कैसे उसको सेफ रखें. These are the 5 principles of financial literacy. You must have knowledge about it. Yes, Pranav, any question?
I'm sorry, I don't know Hindi actually.
Okay, not okay. I'm trying to speak in the both of the language so that if anybody know the Hindi, she can also understand very well.
Okay, all right.
Okay, but 90-95% I will be in the English language so that you can also know about the meaning of the words. Now, budgeting. Budgeting is a very important tool to know about your financial condition. Could you tell me in which month Union Ministry present a budget of India? In which month India's budget came in the market? Any idea? Yes or no? Okay. I just simplify it. In which month Nirmala Sitaraman present the budget in front of all Indian citizens?
July this year.
July. Not the July. That is a February month. Every February month, the finance minister represent or present the union ministry budget. Why they are presenting? The reason is that India also know about it, how much tax are collecting from Indian citizen and how much expenses toward the Indian citizens safety and their environments. So every month make a budget that how much income I getting, how much expenses I need to put for my household expenses and on myself. So whatever left in your pocket, that is your saving. And saving is very important. Without a saving, you cannot invest in anywhere. If you have a money, so that you can invest. If you don't have a money, you cannot invest in anywhere. So budgeting is a very important tool. This is a process of budget making. Number 1, set a plan of action, identify your income, identify your expenses, prioritize the urgency, and execute the plan. This is the budgeting process. Now, what is saving and what is investment? Anybody can tell me what is the difference between saving and investments? Rishita, Rafe, Prashant.
Can I
Saving
try?
is basically the part of the income which you're not spending and essentially collecting with you. And investment is basically you trying to get your money to work for you, investing it in different options to make it grow possibly.
Okay. Yes. Anybody else?
Can I try?
Yes. Yes.
I think in savings, the amount of money you have remains the same, but in investments, you can get more money form of interest or something.
So let's suppose, as per your statement, if I'm deposit my money in the saving bank account where I will get the interest of 3% annually, so I'm appreciate for my money. But you are saying that the amount would be same in the saving category.
Well, maybe in banks you can get an interest, but when you save it personally, you don't.
Okay. Yes. Any other person? Yeah, Parshava.
So like in savings is basically like even if you save in your bank account, like your savings bank account, the amount or the interest that you get on your amount is very low than the investment rate. If you compare the rate of interest of a savings account and normal investments like mutual funds or any other investment, the rate is comparatively sorry, is comparatively lesser than the normal investments.
Okay.
Even
And what
stock
investments?
market, like stock market or mutual funds or anything, shares
Okay.
or something.
If I deposit my money in the fixed deposit, what would be it? Saving or investment?
Sir, it's a saving. It's like simple interest on fixed deposits, like, but it is like the amount. Sorry, on investments, the
But
amount is
some
getting
banks provide,
compounded.
but Parshava, some banks provide compounding interest on the FD also.
Okay. No, I had only like this much difference. I thought. Yeah.
Okay, not an issue. The simple thing is that if you want to make your money at the highest liquidity, whenever you want it, you can easily withdraw. That is count as a saving. That's why you are depositing your money in a saving bank account. So whenever you want it, you can easily withdraw it without if and buts. You can withdraw through the UPI, through the check, through the ATM, or through the bank also. But if you want to grow your money on some kind of risk and you can wait for it, so definitely it would be count as an investment, so that you can invest in fixed deposit, in the stock market, in a mutual funds, in a insurance, or in a real estate too. So if the liquidity is very high, whenever you want it, without if and but, count as a saving. That's why we are depositing money in a saving account, because we want any emergency occurs, I can withdraw it. But if you deposit your money in the fixed deposit, there's a maturity period. You cannot withdraw it before the maturity. If you withdraw it, so definitely you need to bear a penalty. Similar with the mutual fund, similar with the stocks, similar with the insurance. So whenever you want a liquidity, we will go with the savings. Whenever I want to grow my money on the ground of some kind of risk, I would prefer investments. So investment will be done after the saving. Whatever left in my pocket, that is going for the investment. But whatever is necessary for me to survival my benefits, that is count as a saving. That's the reason saving account is count as saving, but the fixed deposit count as an investment. Are you getting my point, guys?
Yes.
Great.
Yes, sir.
Now we will understand about the very important points, that is called a diversification. Diversification very necessary. That is as per my experience, people are not aware about the diversification. They directly invest their entire money into one assets, maybe commodity, maybe equity, or maybe real estate. But if you are a financial literate person, so you need to diversify your investment. Some of the money divided into equities, that is share bazaar or mutual funds. Some of the money should invest in the commodities, that is gold, silver, crude oil. Some of the money should invested in real estate, similar with the bonds and cash, so that if one asset's not giving a return, another can also provide you. There is a opposite reaction to the market. If the equity market going down, so the gold price getting rise, and if equity market getting rise, so the gold price getting down. There's an inverse proportion of the markets. That is the reason everybody should diversify the investment, not invest all of the money in the one assets. It is said by the very famous person, Mr. Warren Buffett, said, do not put all your eggs in one basket. Yes, do not put all your eggs in one basket. Put your every single eggs in a different basket, so that if one basket get dropped, another basket gets saved. So that is the meaning of diversification. So we are in the middle of the today's session. We will complete the basic sense of financial terminology. Now we will understand about the terminologies of the stock market and financial market. So let's start. Financial market. So financial market is a market where you can invest or trade in a financial securities for expecting of some kind of return or profit. So financial market is divided into two parts, capital market and the money market. Capital market is a market where you can invest for the long-term purpose, 1 year, 2 year, 10 year, or lifelong. But money market is a market where you can invest only up to the 1 year. You cannot hold beyond the 1 year. At the 365 days, your investment get matured and all the amounts will get into your bank account. But if you want to invest for the longer run, you can go with the capital market. So capital market examples are stocks, mutual funds, bonds, debentures, real estate, currency. These are the example of capital market. So what are the example of money market? That is commercial paper, which is issued by company to generate some kind of funds from the public. Second is treasury bills. It is also issued by the same reason, but issued by the banks and issued to the public to gain some kind of fund so that they can invest in infrastructure. So treasury bills, commercial paper, these are the example of money market. So money market is regulated by RBI, Reserve Bank of India, whereas capital market is regulated by the SEBI, Security and Exchange Board of India. So if you want to invest in capital market, you need to follow SEBI rules and regulations. If you want to invest in money market, you need to follow RBI rules and regulations. Now, capital market again divided into two parts, primary market and secondary market. So you must have heard about that. Hyundai IPO has come a few weeks ago. Have you read about it?
Yes.
Yes. So that Hyundai IPO, it is a primary market product. Whenever company want to raise fund from the public, that is come in the primary market. Similarly, Swiggy IPO is coming. It started from the 6th of November. Similarly, NSE IPO is coming. So these IPOs count as a primary market. Once IPO is completed, company get fund from the public and share issued to the public. Now these shares get listed over the exchanges. That is NSE and BSE, where trading can happen. You can purchase the shares from one trader and you can sell the shares to the same trader. That is count as a secondary market. So trading happens only in secondary market, but share issuing and fundraising only happens in the primary market. So primary market process are IPO, initial public offer, FPO, following public offer, OFS, offer for sale. So these are the primary market process. So any questions between them, primary and secondary market?
So how do you essentially differentiate between primary and secondary market? Because the IPOs are basically getting listed on the stock exchanges, right? So
Yes.
they're essentially a sub part of it, isn't it?
Yes, it depends on your choices. If you want to invest earlier at the time of stocks so that you can get more profit, then you can should invest in primary market. You can long hold to the secondary market also. But if you want to gain some kind of short-term trading and you just want to invest in a listed company only, not unlisted company, then you can go with the secondary market. So just like a few days ago, there's a IPO came. Uh, the name is I'm forgetting this name. Just give me 1 second. The very good IPO has come in the market in a few days back. Any idea which IPO has come that gives the 95 return in a single day? Any idea, guys? I'm just searching this name. I'm just forgetting. Just 1 second. Now the Niva Bhupa IPO is coming. Also Swiggy IPO is coming. Apart from that, there's a successful IPO has come in the, yes, Wari Engineerings. Yes, I got the name. Wari Engineerings. They provide 95% return in a single day. That is the magic of IPO. If a company is very good, valuation is very good, so you can invest in the IPO. But if you are not aware about the IPO's rules and regulation, so you can invest in the secondary market. It's up to you. Are you getting my point, Qureshi?
Yes, yes.
Okay. Moving on. What is stock market? Simply, the stock market are venues where buyers and sellers meet to exchange equity shares of public corporation. And what is shares? A share represents a unit of equity ownership in a company. So let's suppose if I purchase the share of Reliance Industry, so I'll become a owner of that particular share. Yes. So whatever the shares I'm purchasing through the Reliance Industry, I'm getting the more ownership in a company if I hold more than 50% shares in a particular Reliance Industry company. So definitely I'll become the managing director of the Reliance Industry and I become the owner of that Reliance Industry. So it totally depends on the shareholding pattern. If someone has a larger shareholding pattern in a company, that become a owner of company. If someone is a lesser shareholding in company, so they own only shares of that particular company, not the entire companies. These are the important investment assets classes where you can invest into equities, cash equivalents, mutual funds, real estate, fixed income, commodities, and insurance. You can easily invest in these assets classes. Anyone have a question related to this investment assets class? Yes, Qureshi.
So in this list that you've shown me, where do you classify bonds?
Yes, bonds. So basically bonds undercome in the fixed income.
Okay.
Yeah, because you will get the guaranteed return, guaranteed income on the investments. That is known as a fixed income.
No, but that is a bit subjective, right? So it depends on government bond or corporate bonds, right? If you're talking
See,
about
government bonds and corporate bonds both provide a guaranteed return, but government bonds is a laser riskier because if government get collapse, then there's chance to lose your money. But if the companies get collapse, so definitely you can use your entire amount. So corporate bonds is a little bit riskier in compared to government bonds.
okay, but no, but I was trying to say that they don't essentially yield you a fixed income, and if they do, how do they do so? Because the prices can fluctuate, right? For a
See, in trading, in the bonds trading can get fluctuate, but the interest would be same. Let's suppose if I invest in NHAI infrastructure bond, that is the National Highway Authority of India. If I invest in NHAI infrastructure board, so definitely I will get a 6% return on the annual basis. There is a for sure guaranteed. But for trading in the bonds, I'm purchasing today and selling to another person, that is a fluctuating price. But the 6% return would be same. There is no changes in the return or the interest in the bond section.
all right,
Okay. Yeah. Any other questions? So we are moving ahead. Why to invest in the stock market? The reason is you want to maximize your return. You want to beat the inflation. Definitely. In India, inflation running around 5 to 6%. So if any product given you more than a return from the inflation rate, so it would be better for you. And the stock market provides 15, 16, or even 100% return, 1000% return on the investment. That's the reason you can beat the inflation. Reach out your financial goal with the right mix of investment, reduce investing risk with a solid assets allocation strategy that is known as diversification, and reduce risk with well-planned strategy for buying and selling stocks. So these are the reasons to invest in the stock market. Now, a very important slides of today's session. If you want to invest in capital market, so these are the participants which helps to invest in the stock market. Number one, trader or investor. So trader is a person who invests their money for the short-term reason, like trading purpose or 1 week or 1 day holding purpose. But investor is a person who hold their investment for the long-term period, just like 1 year, 2 year, 10 year. So investor go for the long term and trader go for the short term or even day-to-day trading. Exchanges is a platform where companies or commodities get listed, where buyer or seller can easily transact between them. Depositories is a government institutions who provide the safety of your shares into a demat account. So whenever you open a demat account with any broker like Angel One, Zerodha, Upstock, these are directly connected with the depositories. So India has a two depository, CDSL or NSDL. So your demat account would be opened with the CDSL or the NSDL. They provide a safety of your shares. Broker. So broker is a person or firm who open your demat account, and through this demat account you can purchase or sell the shares. Just like Angel One, Swastika InvestSmart. These are the broker or DP participants. And the last is regulator, who control the entire market, who control the rules and regulation, who make the policies. If someone is not following the policy, so definitely they have a right to penalize them. So for the capital market, who is the regulator? Anyone? For the capital market, who is the regulator?
SEBI.
SEBI, exactly. Security and Exchange Board of India. So these are the participants. Next is exchanges. So India has a major exchanges. That is two major exchange, NSE and BSE. NSE has more than 1,800 companies and BSE has more than 5,000 companies. NSE's index name is Nifty 50, who represent the performance of top 50 companies. And BSE has a index name is Sensex, who represent the performance of top 30 companies. So if you see the Sensex price, that is the meaning that is representing the performance of top 30 companies. If top 30 companies getting rise, the Sensex price also going rise. Similar, Nifty 50 represent the performance of top 50 companies of NSE. If top 50 companies like Reliance, HDFC, TCS, Asian Paint, these price getting rise, so Nifty price also getting rise. Similarly, commodity exchange, if you want to do trade in commodity like gold, silver, copper, crude, you can go with the MCX, multi-commodity exchange. And if you want to trade in agri commodity, soybean, jeera, chana, dhania, you can trade over NCTEX, National Commodity and Derivative Exchange. And the last, currency exchange, that is MCXSX and NSE currency. So these are the exchanges where you can trade or invest in a particular script or securities or commodities. So market has a three types of trend always running. Yes, market will be in a one trend. Can you tell me in which trend the market is running? Bullish, bearish, or consolidation? Any idea?
Consolidation.
Okay.
Bearish, I guess.
Yes. If you see the time frame of this month, so in this month we will see the drop down of the price of Nifty 50 and Sensex. So definitely it is count as a bearish. Bearish means when the market going down. But if I see 2 to 3 days market movement, so I can say that there is a consolidation. Market not going upside, not going downside. There is a consolidation. But if I see the time frame 1 year or 2 year, so definitely there is a rise of price in the shares. So it will be count as a bullish. So bullish, it means market going upside. Bearish means market going downside. And consolidation or sideways means market not going downside, not going upside. That is running in a certain range. It depends on the time frame, which time frame you are using. If you're using longer time frame, it will be counted as a bullish. If you're using mid or a smaller time frame, that is counted as a bearish or consolidation. In the recent scenario. Now, if you want to make up money from the stock market, so there's a two way: buy long position or a short sell position. Buy long position would be better whenever the market is in a bullish range, when the market going upside. So you will simply buy the shares, and after 2 days or 3 days, price get rise, and you sell the shares at a higher price. So you make the profit. Simple. But if the market is in bearish trend, market going downside, and you want to make a profit from the downtrend, so you can follow short sell position where you will be sell the shares which is not in your demat account, and later on you purchase the shares and difference will be counted as a profit. That is a short sell. So that is the reason trader can use both of the strategy, buy long and short sell, but the investor can use only a buy long position, because short sell is only for the same day purpose and buy long will be available for same day or the longer period. It depends on your mindset, it depends on your holding period. So these are the two ways so that you can make money through the stock market: buying position or a short sell position. So we are on the last second slide of today's session, that is technical analysis. So let's suppose you want to invest in the stock market and you want to see it, which companies is good for investment, which company is good for the trading purpose. So technical analysis will assist to you. Through the technical analysis, you can find out the best stocks through the analysis of chart pattern, price of the shares, different kind of indicators and oscillator. So mainly technical analysis is used by the traders only, because they assess you for the short-term trading purpose. But if you want to become an investor and you want to invest for the long-term period, 10 years, 15 years, 20 years, you can use fundamental analysis. Fundamental analysis helps you find out the companies which will give return in the longer run. With the help of company analysis, industry analysis, economic condition, government condition, inflation, wars, all the things, all the aspects will be included in the fundamental analysis. So fundamental analysis used for the investor and technical analysis used for the trader. It depends on you what you want to become, trader or investor. So this is all from my side, guys. I hope you enjoy the entire session and you must learn about a new concept about stock market and financial literacy. Still, if you have a doubt, you can ask me. Yes. Any questions between the entire session? Yeah, or any other question which you in your mind and you want to know about the stock market and their methodology, anything.
What were the two methods you mentioned for stocks?
Buy long and short sell.
Yeah, okay. I'll know.
Yes. So let's suppose you want to make a profit through the bullish market. So you will be use buy long method. But if you want to make a profit through the bearish market, you can use the short sell. But if you use in the wrong place, you will get a losses. If you make buy long in the bearish market, you will be in the loss. And if you uh, make short sell position in the bullish market, you will be in the loss. So the
So
correct
buy long
position,
is
yeah,
like mostly for long-term
yes, for the
purposes.
long term reason or a intraday reason, it depends on you. Buy long means simply you will first buy the shares and later on you sell the shares. But short sale is you sell the share first and later on you buy back the shares.
Okay, so you sell the shares when it's in a greater value and let it dip down
Yes,
and
for the
later on
lesser
purchase
values.
it.
Yes,
Okay.
exactly. Yes. Insha Sheikh, any
Yeah,
question?
what were the two subdivisions of financial market? There was capital market and then there was one more.
Money market. So money market is an instrument where you can invest for the up to 365 days. So it is regulated by the banks mainly. So there is an instrument is like treasury bills. So for an example, government want to raise the fund to provide the salary for their MLS and MPs, or also required some kind of operational expenses. So for the short term reason, the government can raise the money from the public through the treasury bills. Similarly, if company want to raise the money for the short term reason, so they can issue the commercial paper to the public. So that will be only 365 days only.
Oh, also, you mentioned an IPO that gives 95% return. Could you share that IPO?
IPO means initial public offer. So let's suppose my name is Dipanshu Sethi and I manage my company Sethi and Sons Limited. Says Sethi and Sons Private Limited. Now I want to expand my business. So I required a finance, and I already taken the loans from the banks. I already have a mortgage of my property. Still, I required some kind of extra money. So what I can do, I can convert my private limited company into a public limited company so that I can make owner to the public in my company and can raise the money from the public. So that is a primary market where the company comes to the market and issues the shares to the public and raise fund from the public and giving the ownership to them. Okay, like a LIC.
Wait, actually, my question was that you said that there was a very good IPO that was recently released, and
Huh.
for a moment you said its name and it gave 95% returns or
Yeah,
something.
Wari Engineerings.
Oh, like so WARI.
Yeah, WAREE.
Oh, okay. That's all I wanted. Thank you.
Okay, all right. Wari Engineering Limited, the IPO name. Yes. Any other questions? Okay, if you don't have a question, so I believing that you must have enjoyed all the entire session. And now the second or third or fourth session will be recorded on the UA platform. You can directly log into UA platform, and the all recorded video will be available at that platform. So one by one, you can watch all videos. And we will meet in the second live session where we'll be discussing about the broker and their responsibilities, how the brokers work, what are the responsibilities, what is a demat and trading account, how you can open the demat and trading account, how the brokers charge the brokerages on the trade or investments trades. So these are the topics which will be covered in the next live session. Till the time, you can watch the all recorded videos. Okay, Pranav?
Yeah, okay.
Yeah. Any
No,
questions?
sorry, no questions.
Okay, so thank you so much, guys, to join this session. I'm very happy that you are listening me carefully and very consciously. We will meet in the next live session. Till the time, please watch the recorded video for a happy learning and happy stay. Thank you. Good night, guys.
Good night,
Thank
sir.
you.
Thank you,
Thank you.
sir.